Alright guys, I want to do a quick video on Mullen, and basically what I'm going to go over is some dilution numbers and the 884 warrants. I want people to have a better understanding of what that looks like. One thing that I was looking at today was that ATER, ATER stock symbol, had its earnings call yesterday, and I did not see an update on dilution. I only saw things up to March 31st, but they've been diluting since after March 31st on ATER for sure. I'm not sure how many shares. Like, there hasn't been that much volume, so I doubt it's that much dilution. But I was surprised to see that they didn't put an update in their filing, and I couldn't find the online transcript or live call recording anywhere yet, and I'm not sure if they said it on there. So if anybody knows that if ATER announced dilution and you could comment in the video, I'd appreciate that. But I'd be really pissed off if Mullen had its earnings and dilution was not announced by earnings, like up-to-date dilution. But either way, it's not that important because I do believe that we are going to squeeze before earnings. So real quick, there's 558 million shares of capital stock, including 500 million shares of common stock and 58 million shares of preferred stock. So this is 558 million shares is the total number of shares there can ever be. Now, with this last filing they did of the 253 million shares, which is their final shares besides what the insiders have that they could ever dilute. So like insiders own like 38 million shares or something. And then there's 253 million that they just put up for an offering back in April. They got nothing else after that, people. And so that's your little proof right there. As far as the 884 exercise warrants, there is a cashless option that they can basically, instead of getting 884 a share for the shares that they already have, and let me make sure I got that right. So I actually don't know if it's like basically there's a formula and it's kind of complex. But basically, depending on what the stock price is when they exercise determines how many shares they're going to get and determines whether they got to pay for those shares or not. And so I believe if it's 884 above, they have to pay. And then below that, they can do a cashless exercise. And they get more shares if they do it below the 884. But those shares are coming from the 253 million that Mullen already did an offering for in April. And so basically 200 million of those shares are warrant shares. And what that means is they're locked up for the 58 million warrants that the insiders have that they can exercise when needed. And depending on what price they exercise, they need up to that 200 million to meet the exercise obligation. And in this filing, it also states that after the exercise is done, whatever shares are left over, they're just going to sell them to retail. And so basically, regardless if we have to finish our dilution war through the people exercising their warrants, or we have to buy them all from Mullen, it doesn't really matter. It's still the same amount of shares. It's still the same dilution war. And yeah, there's nothing to worry about. Easy peasy lemon squeezy. Now, I do want to show you something that I was looking at. So when AMC did its dilution war back in 2021, from January it had 200 million shares, maybe 250 million outstanding shares. And then by the time it got to early May, it got up to 450 million shares, actually 420 million shares. And then middle of May, right before the squeeze, Wanda sold off their final 30 million shares, and it got up to like 450 million outstanding shares. And then it squoze to 72, and they controlled that during the squeeze. And from the time that it started to squeeze till the squeeze was done, It went from 450 million shares to 516 million shares, and they only ever had 526 million shares. So like basically there was 10 million shares away from running out of shares to dilute. Now, AMC was at $14 when it started to squeeze, or actually it was at $12 that Friday, $12.50 that Friday, and then it squoze all the way to $72 6 trading days later. And basically, because we know that there was 450 million shares that they diluted to retail, then they needed to hold on to roughly that 66 million shares to control the squeeze. And so that's when AMC's at $12. Well, Mullen's only at $1 right now. And so that 66 million shares they had when they let it run from $12 to $72, I mean, if we just assume an average price of $30, that's $30 times 60 million is $1.8 billion. Did I get that right? 60 million times 30 would be, $1.8 billion that they could suck out of retail and not allow the price to keep moving up. Like basically retail would have had to thrown in $2 billion all at one time as it's squeezing upward as an average of $30 a share, and nobody would be able to sell, and then AMC would have had its MOAS. Or at least retail would have been able to choose the floor. And because Mullen's only at $1, like $2 billion worth of shares would be so much, right? And so what I'm getting at is when Mullen goes from $1 to $10, there's going to be a lot of FOMO like there was with AMC, GME, all these other stocks. And ultimately, I just think that they're going to need to hold on to a lot more than just 66 million shares. So, I mean, let's say they could control it with 150 million shares and they get it to $10 real quick. I mean, that's something that's possible, right? And then that would be $1.5 billion. Kind of put them in a similar ballpark as they were with AMC. And obviously, the more they raise the price, the more they get retail to sell. And so they kind of control it with dilution, but then they're also just controlling that dilution to eventually get retail to sell. And once retail sells a certain amount, they no longer got to worry about the problem. And so I wanted to go over this real quick with you and show you something that I was looking at. So if we look at their first dilution filing, February 11th was when they filed it, which is right here. And this is the volume. There's 6 million of volume that day. Volume really, really low for Mullen coming into this. Volume starts to pick up around February 18th. And over the course of 15 days, from February 18th all the way to March 11th, right here, the volume, if you add all this up, it was about 3 billion in volume, a little less than 3 billion in volume. And so that means 3 billion shares traded. And inside that 3 billion shares traded from February 18th to March 11th, retail bought 150 million shares, roughly. So this is when they announced that the outstanding shares went to 188 million and that retail owned 150 million. So maybe we bought 140 million or 130 million because the free float wasn't more than 20 million before this all started. Probably less than that. And so if you do the math of how many shares were traded and how much retail bought in dilution, it comes out to roughly 5%. So that means 5% of every trading day, retail is 5% of that volume is retail buying dilution. So if it's 100 million shares traded, that means retail likely bought about 5 million shares. Like, we're such a small portion of the volume, it seems almost insignificant until you add up a couple months of retail buying the same stock. And so from March 14th all the way to March 25th, we had, what was it? I believe we had like another $3 billion of volume. Now, this is when the price went from $1.77 to $4.18. And if we add up the 50 million shares that were diluted in this portion, it came out to like 1.75% of the volume in this 10 days where the price was going up was positive retail buying dilution. And so what I'm suggesting is there's probably a lot of new investors coming in when they saw it going to 418, but there's also probably a lot of people that sold when they got in at 50 cents a month before, and then it hit 418. A lot of people probably took a lot of profits. And so when that happened, we still ended up with a net positive retail buying dilution. But it dropped from a 5% average to like a 1.75% average of the daily volume of retail buying. And then after that, we had March 28th all the way to March 31st. And here there's 900 million volume. And we know that there was 44 million shares that were diluted in this time frame. If you add that up, you get about 5% dilution. And that's from March 28th to here. So that's basically, we went from $2.45 to $3. And so the price going up a little bit, but not much. And even with a little bit of positive price action, we still see the 5% dilution buying from retail. And so we had, when we were down at $1, we could assume that 5% of all the volume was going to buying dilution. Then when we rocketed from the $1.75 to the $4.18, because a lot of people sold, it knocked down our dilution percent average of the 1.75%. And then at the next dilution announcement, we know that we had a little bit of a price positive action, 25% gains, and we came back to our 5% average volume was retail buying dilution. Since here, April 1st, we've gotten no information on our dilution, and we were at 287 stock. If we look at the stock price, we dropped down to 240, then we dropped down to $1.84, then $1.40, all the way down until today where we hit below $1 at 95 cents. This is the first time that we are going through the dilution process as the price is going down. Okay, so it would be, in my opinion, that if the price is going up and we're getting a lot of buyers, and everyone knows that Mullen's the third largest owned, like retail's got more money in Mullen than any other stocks in the world, other than Tesla and AMC. That's what the Fintel data is showing. Then it's my opinion that they're dropping this stock price to try to get people to sell and try to make it look scary. But I believe that retail is buying. I believe retail is probably buying more dilution in these numbers than they were in any of the other three areas that we just looked at. So if we assume the 5%, there's about $1.7 billion of volume, or shares of volume, from April 1st to today. And that would be about 85 million shares that retail has bought. And so if we look at there's 296 million outstanding, counting the insiders. And then if we add the 85 million, that pulls us to 381 million. We know that they can't ever have more than 570 million. And so that would say there's 189 million. But remember, they got to hold on to a certain number of these to control the squeeze as it starts to move up. And so whether they got to hold on to 100 million or whether they got to hold on to 150 million, no one really knows, and I'm just speculating here. But on top of the amount that they got to hold in order to control the squeeze, I also believe that because the stock price has been falling so consistently over the last 3 weeks, like, you're never going to convince me that retail's ever going to back away from a retail dilution war. I saw it in the AMC. I've seen it in several other stocks. Whenever retail starts buying, they always keep buying, and nobody sells until they get paid. Like, you might have had some people sell at that 418, but there's always more buyers than sellers until we get our squeeze, until we get paid. And so it could very well be that in this decline of stock price, the retail has gone from 5% of the volume being retail dilution buying to 10. And instead of 85 million, it could be 170 million, which would only leave, like, basically it would be another 85 million out of this, which would only leave 104 million shares. And remember, they need probably at least 100 million shares and Mullen at a $10 stock price to stop the FOMO. If they just let this run to $5 and then they try to crash it again and retail FOMOs with the $100 million, they got no shares left. And so it'd actually be $500 million retail's got to do. But if you look at AMC, so the week of where the Friday options expired on April 23rd, you can look up dilution news around that date, April 23rd, and you'll see the week before they announced that they sold, I believe it was 43 million shares at an average of like $8 a share for like $400 million. Retail did $400 million of AMC buying at $8 a share all in 1 week. And then if you go to the May like 11th to the 15th, there's another report where Wanda sells 30 million shares at $14 a share, and that was for like $500 million all in 1 week. And so if we jump from $1 to $5 right now, what do you think retail is going to do? They're going to FOMO like they have in everything else. And what I'm suggesting is when this thing pops off, it's probably going to go a lot further than just $5 on like the first run up. It might go to like $1 to $2, but it's going to go to $2 from $10. And the reason they're going to do that is so that as they slowly increase the price from $10, they can use their remaining dilution to control the squeeze until retail starts to sell their stocks. Yeah. I mean, I'm just messing around with numbers, looking at data right now, and if you kind of think big picture of everything I'm saying, I mean, man, like, best case scenario, the squeeze is tomorrow. Worst case scenario, the squeeze is the week after earnings, like, based on the math. I personally believe the squeeze got to be before earnings, but if they hide the dilution data, if they don't give us up-to-date data, and they don't tell us that they got $300 to $400 million in cash already that they've raised from diluting us so far. I mean, maybe it's a week after earnings. I don't know for sure, but a lot of stuff's happening right now. The end of May, same time around earnings, they're expected to tell us about the degradation of the batteries and how they do when they're like the power's drained and then recharged, drained and recharged. And if that test comes out well, then they're basically acknowledging they got the best electric vehicle technology on the entire market. And I mean, that alone is enough to actually bring in totally new investors that don't even like chasing squeezes. Yeah, I hope all that math made sense to you. I mean, you can go and like actually plug it into an Excel and look at it more closely if you like, but I'm just spitballing here, having fun. It crossed my mind when I was taking a shower. I was like, I've never really looked at the volume and seen what percent of the volume was retail buying power. And when I look at it, like, we're never more than 5%, people. So any day you see 100 million shares traded, like, we could be 5 million. If the price is declining, maybe we could be 10 million of those shares. But like, it's literally just them trading back and forth to mess with the stock price, up and down, to mess with retail buyers. And I'm certain that they're always just sending it to whatever price has the least amount of buyers. So like if they see that they can move it up 3% and now like nobody's buying, then that's what they'll do. Like if $1.07 is the number that people are buying the least, that's where they're going to move it. If it's 96 cents, then that's where they're going to move it. And I think it's really just that simple, except for when like volume's actually coming in regardless of the price. Then I think they just throw up a bunch of dilution shares and they just crash the price. Now that's one thing you got to understand. So if I just told you that we never buy more than 5% of the shares that are traded in a trading day. So let's say there's 100 million shares. We did 5 million of those shares. Over the course of 6 hours, or let's just say 5 hours, that means there's 1 million shares traded an hour, right? By retail. Retail's buying 1 million shares an hour. Well, if we're buying 1 million shares an hour, all throughout that hour, there are so many more shares being traded than just that million that retail's actually buying. And all they have to do is throw 1,000,001 shares on to sell after retail tries to buy 1 million. And after all those retail buys 1 million and there's no one left to buy for that hour, it only takes that one share for them to put on the market and they could drop the price 50%. That's literally how it works. If there's no one buying, all they got to do is throw one more share up there for sale at a lower price. And if there's no one willing to buy it at the lower price, then it just keeps on dropping the price. Keeps on dropping the price. And so that's the only like they can control the price up and down all they want up until retail owns every stock. Then we get to choose the floor. And that's the point of all this. We're in a dilution war. Like you got to forget about the price. Buy if you can. And then eventually we own every share, and $10, $20, $30, $40, it's all possible. It's all very, very possible. I won't know exactly how I feel it's going to go until it actually happens, and I'm just going to look day by day and tell you guys how I feel and let you know when I cash out. But, yeah, I just giving you guys some more information. All right, guys. Good luck.